Verizon's fourth quarter earnings missed consensus by 1 penny. Customers spent less on voice plans. Fourth quarter revenue, though, in line, $26.4 billion. With more analysis on the quarter that was, more on the future, we bring in David Burks of Hilliard Lyons. Bloomberg data show that he is one of the most accurate forecasters on Verizon. It makes him a Bloomberg best. David, thanks so much for joining us this morning. What do you make of this fourth quarter earnings miss? I mean, customers do seem to be spending less on these wireless calling plans. I mean, there's more discounts, friends and family, unlimited plans. How important is that for Verizon going forward?
Good morning. It's a pleasure to be with you. We think overall it was a solid fourth quarter for Verizon. Yes, earnings were maybe a penny shy of expectations, but overall the most important aspect of the quarter from our perspective was the increase in both wireline and wireless margins. Wireless margins were 47.5% and the highest in the company's history. Moreover, wireline margins increased for the third consecutive quarter up to 23.5%. That's an encouraging trend for the company in our view.
Now, David, we know that Verizon is going to start offering the iPhone, Apple's iPhone, to its existing customers first week of February. Everybody else, new customers, can get it through Verizon second week of February. But since we're talking about margins, just how much is the iPhone going to hurt Verizon's margins? I mean, we've seen the subsidy from Verizon estimated at about $400 per phone.
That's correct. We will know more within the hour. The company is hosting an analyst conference in about 45 minutes or so, and the company will make a presentation and lay out what their expectations are for the year, presumably, relative to the iPhone. We certainly agree with you that there's the potential for earnings dilution associated with the product, perhaps anywhere from 5 to 15 cents per share. We saw this happen with AT&T when they began to sell the iPhone. However, they are in the favorable position of starting with the highest margins within the industry, and we think that while there could be a short-term earnings hit, that long-term earnings will be driven by the inclusion of the iPhone in their smartphone lineup.
Is it sort of just a good or bad situation, David? I mean, it seems like Verizon could sell about 13 million iPhones. That's some analyst consensus. So that's the good news, but then obviously it costs Verizon between $3 and $5 billion.
That's right. It is sort of a paradox. The more you sell, in effect, the more earnings dilution that comes with the additional sales. However, we still think it is a major long-term strategic positive. We note that Verizon's, in terms of their wireless smartphone devices, only about 25% come from smartphones versus about 50% with AT&T. We think that percentage will ramp up significantly over the course of the year. And again, this really bolsters the company's long-term lineup.
David, thanks so much for joining us. David Burks joining us there from Hilliard Lyons. He is a Bloomberg best on Verizon.